Roadblocks ahead for a mega merger. The Federal Trade Commission is suing to block Kroger's $24.6 billion acquisition of Albertsons. The FTC believes that the deal would cause grocery price hikes for many Americans. Kroger responding that the blocking of the merger will actually harm America's consumers and workers. For more on the lawsuit, we're joined by Bill Kovacic, who served as the FTC chairman from 2008 until 2009, alongside Mozelle Thompson, former FTC commissioner who served from 1997 to 2003. Great to have both of you here on the morning to discuss this. First, Bill, I want to go to you on this matter. As you think about what the FTC is looking for here and the arguments that are going to have to be put forward by both Kroger and Albertsons, what are you anticipating?
The FTC has gathered a considerable amount of evidence that's presented in their complaint that in a variety of geographic areas, this transaction is going to create substantial concentration in a market consisting of traditional supermarkets. I think to some extent, Kroger and Albertson will contest that and say that there are retail possibilities that are being left aside. But I think they realize that as a matter of traditional analysis, that they have a problem there. They've tried to solve it by offering a package of divestitures that includes over 400 retail outlets. A core issue in the case is going to be the adequacy of that solution. The FTC says it's not adequate. It's not going to provide robust competition. I think the key substantive issue in the case will be how good is the divestiture package, and is C&S Wholesale, the buyer, going to be an effective purchaser and operator of those assets?
Mozelle, what do you think of the FTC's argument and whether or not, from what we know at this point, if it has a strong case?
The traditional criteria they're using, I think, create a solid case on the question of whether we're going to see increased concentration in the market. The companies recognize this, and again, the real issue is, have they come up with a solution that's going to be sufficient? The FTC also, to an extent that it has not done before, has highlighted the effect of the transaction on workers. A key argument that the FTC is making is that the deal is not just bad for consumers, it's bad for the employees of the two companies. And again, to an unprecedented degree, the FTC is saying that that is a major area of harm from the transaction. And I suspect that as well is going to be a focus of on the discussion of the adequacy of the divestiture. So more than we've seen before, the FTC is emphasizing the adverse effect on workers.
Mozelle, do you agree?
Yeah. Well, yes, but I also would say that you have to look at what the market definition is here. One of the things that Kroger and Albertsons are going to argue is that the people who provide groceries, that market is much bigger than the FTC may actually claim it is. That they say that there are some benefits from them being at a scale where they can compete with entrants like Costco and entrants like Walmart, who are major grocery chains now. And there are also companies like CVS and Walgreens who are also selling groceries, and Target. So they would argue that the market is much broader. But I do think, as Bill points out, they've made major concessions here. The question is whether those concessions will be viewed as adequate.
Mozelle,
In addition, the FTC is embarking on a test of its new merger guidelines, and that includes, as Bill mentioned, the impact on labor markets, which is a little bit a broader view of competition that has traditionally been there. I don't know how much the courts will look at that and adopt it or not. That's a new area.
Well, Mozelle, to expand on that even just a little bit more, I guess from what we know in this case, and at least the FTC's argument up until this point, what does that tell us even more just about the approach or the landscape here for mergers under the Biden administration?
Well, one of the things that's happened is that they've sent a clear message that mergers will be looked at more carefully, and with a broader approach, looking at an array of different possible impacts. And I think that the test of those impacts are going to be weighed by courts. So far, they haven't had great success, but they're still whittling away at it. And I think this is what they're doing, and also the Department of Justice. What it also says to investors is that deals may still get through, but it will be more expensive and take more time. And to the extent that the Biden administration wants to send a signal that that may give a chilling effect to mergers, that's something that has definitely happened, and the market is responding to that.
And Bill, coming back to you, is Capital One Discover in a separate conversation one of those deals that we anticipate could or should go through from your perspective?
I think this is one that's going to get a very close look and could well elicit a challenge. To go back to Mozelle's point, part of the Biden administration's program here is premised on the idea that merger policy going back over a 40-year period was far too permissive in major sectors such as financial services. And from both ends of Pennsylvania Avenue, from the White House and from the Congress, we see demands that the competition regulators and the Department of the Treasury bear down on exactly this kind of merger. All of that points in the direction not only of a close review, but one can imagine a challenge as well. That is, the atmosphere supporting intervention is very strong here.
And Mozelle, to expand on Bill's point even more, just beyond that, just the impact that this is going to have on investors, or how investors should potentially view these latest actions from the FTC.
Well, I think what it means is that the antitrust climate is going to be tough. And I think that people who are looking to merge are going to have to not only look at the timing of those mergers, but be able to come up with some real benefits and to show that, and I think the deals will take place, but only the best deals and only the ones that are willing to withstand scrutiny and to take the time necessary for the review to take place. Now, on Capital One Discover, there are a lot of people with their fingers in the pie. They're the financial regulators who look at safety and soundness, but there are also the antitrust regulators to look at impact on consumers. And I think what you also have here is a couple of different apples and oranges. Not only the thing that you see off the bat is major issues of credit cards, but don't forget that Discover also has its own network that actually has a relationship with merchants. That, in combination with a credit card provider like Capital One, puts them in a unique position in the competitive landscape.
And some of what you guys are saying is very similar in terms of the atmosphere supporting intervention at this point in time. But that also creates a risk of, like we saw with the banking crisis last year, waiting for companies to be so distressed to the point where it's only some of the largest players that can then have the balance sheets to be able to swoop in and save them. What does that have as a broader economic impact as well? Mozelle, I'll go to you on that one first.
Well, I think that that's one of the things that the financial regulators are going to be looking at, because this is a mega transaction, but it looks a little different than the traditional banking transaction. And because of that, they're going to look at how it's going to impact people who use the banking services of these entities. That's a little bit of a review that is not particularly transparent, that not many people in the public look at very often. But it will also be very interesting to new entrants who provide certain kinds of services, whether it's PayPal or other kinds of payment services, and whether this transaction will essentially block them from being competitive.
Bill, I want to offer one last thought to you on that.
I agree with Mozelle's assessment. I think that it's useful to keep in mind, again, the overall philosophy that the agencies and the administration bring to these matters. And in looking back at earlier crises, there's a strong belief that it was the fact of too few players in the market, too little competition, too much consolidation that painted the country into a corner. That all creates a presumption that deep consolidations of this kind are problematic.